FutureTrend channel is glad to welcome all of our subscribers. For the date of 7th of August 2018, we start our everyday's analysis of major currencies. Yesterday, during our previous analysis, we already made some kind of comments on the future prospects of the United States currency. As you know now, probably one of the driving forces that still support the United States currency is the current trading stance conducted by United States President administration. As you know, from the point of view of let's say a moderate kind of trade normalization, I mean tariff policy of the United States with major economic partners. Of course, from that point of view, probably in case of moderate rising of existing tariffs on imported goods to the United States, that should lead to a higher return and to a higher return for the United States. I mean that the fiscal position of the United States should improve a little bit, let's say so. At the same time, we should understand that there is a longer-term problems of the United States economy, and one of them is the so-called twin deficit, which is the largest among the major economies in the world. And of course, from the point of view of tariff policy, rising tariffs should improve the negative trade balance of the United States with other trading partners. From that point of view, the United States dollar should receive some additional boost at the moment. Anyway, let's be truth and let's understand the longer-term positions. We should understand that the United States is the economy of consumption, and I think it should take a lot of time, really, probably some kind of decades, to improve the fiscal position of the United States, and we don't agree with some other analytics who argue that current tariff policy conducted by the United States, I mean the policy of raising tariffs, should improve this situation, I mean the situation with twin deficit or the fiscal position of the United States. Moreover, we should understand that such kind of policy should sooner or later also affect the United States economic situation, the current economic situation. And in case if, for example, economic indicators in the United States start to decrease, it should mean that current stance chosen by the United States President finally affected the United States economy, and that should stop the Federal Reserve system from raising its benchmark interest rates. And from that point of view, the attractiveness of the United States currency should also fall. That's of course the fundamental picture. A lot of blah blah, we should understand this, because the real situation with the United States dollar is much more complicated. We should understand that. From a position of technical speaking, let's see, for example, the euro dollar. We should understand that in the nearest future, the pair, I mean the euro dollar, could even undershoot its pivotal support area located around 1.1510, where lies the lows of 2018, because the current position of the United States dollar is quite strong. Anyway, longer-term perspectives, taking into account the end of 2018, is not so good for the United States currency, and our team still suggests that sooner or later the United States dollar will enter a consolidation and even correction phase. And this correction could really be really very sharp. And from that point of view, probably we could see the euro dollar, for example, much higher in case of current stance. I mean that euro dollar in the foreseeable future, in the future of the end of 2018, could even rebound to the level of 119, 120, and even 121. Now we are not speaking about changing of dollar strength, dollar longer term strength of 2018. We are speaking about a technical kind of a rebound of other currencies against the United States one. And the euro dollar, while trading about 115 from technical point of view, should remain, has an opportunity, should reserve an opportunity for a rebound. That's why during previous trading day we bought another portion of position at 115.30 to the lows of previous trading day, and now we have a long large at average at 115.82.5. We have a moderate kind of target at the moment, 117.40. Anyway, anytime we are ready to change our strategy, to change our position regarding the strength of the United States dollar. As regarding the dollar yen should remain depressed, let's say so, because on Thursday the talk between the meeting between Japanese and United States trade officials should start, and of course the market will closely watch at the development of this meeting, because it should determine the future trading relations between two really one of the largest economies in the world, the largest one, and probably another one, the third one, let's say so. At the moment we should understand that the United States is number one, China is number two, probably European Union is number third, and Japan is number fourth. And as regarding sterling, the future of sterling should be determined by a Brexit negotiation process. Of course, the technical position is quite negative for the cable at the moment. Anyway, we still reserve a right to buy the cable on a possible undershooting level of 128, where lies, as we suggest, a really important technical barrier. We will use an opportunity to buy the pound undershooting of 128, because we suggest that sooner or later the cable also should rebound over the course of finishing of 2018. As regarding the dollar, nothing changed really now, because the pair is still trading between a parity level, where finding some stronger selling interest, and the level of roughly 0.9850. All in all, we're still trading inside of some ranges, and still expect that most active players will be back to its job positions, and that will mean that we could see some higher volatility starting from the end of August, beginning of autumn. Thank you very much, ladies and gentlemen. We suggest that our recommendation were more or less useful for you in your trading initiatives. Thank you very much. FutureTrend channel was with you, and we hope that tomorrow in the morning you will be back with us.